let's look at starting with the daily chart on the SPX. Three things of note. One, we broke down below the 200 DMA, and everybody always sees that as, oh, that's terrible. We're in trouble. We're in trouble. You know, in my opinion, I don't think it really means that much. I mean, here we broke down below the 200. We bounced around a bit, even exceeded a little, and then whew, straight down. Here, we danced around it, broke down below it, and straight back up. The 200 DMA is just a point in time. It really is not as meaningful as so many believe. So please don't ask me about the 200 DMA anymore. It really is not that important in the overall scheme of things. If you want to say the longer we consolidate below it, it becomes more meaningful. Maybe it becomes like that with any resistance level. So for now, I'm not even going to bother with 200 EMA. There's another linear perspective that I'm pointing out here, and we have a very long-term trend line here that has been support and or resistance in the past. We happen to be sitting on it now. Okay, that's, like I said, just another linear perspective. The one thing that also is a little uncertain is the MACD has now broken into that major target region. Does that mean we now have a bottom? No, because it can go deep into this target region. Another support level is right here on prior MACD declines. We're approaching it. But again, right now, I would say the MACD is now telling us we are in no man's land. And there is nothing bullish about that MACD at this point in time. I usually use a rule of it has to turn positive for 3 days at least for it to maybe consider another bullish indication. And even so, any turn back up right now, folks, has to be supported by a 5-wave structure. I cannot abide by anything else. In the most bullish case scenario that I'm following, we have an A, B, C that's going to develop for a 5th wave and a diagonal. C waves are traditionally over 90% of the time standard 5-wave Fibonacci pinball structures. Sometimes they're diagonals. I'm not going to buy into one that's a diagonal in this case. I'm really having a hard time putting money into a chart that's going to end a diagonal with a diagonal. Now, as it's completing a diagonal of a diagonal, ending a diagonal, then that is a very strong indication we're about to see a strong reversal. It is not a strong indication for me to be putting money into a chart. Rather, I would be looking at individual charts, ladies and gentlemen, that have much better structures. And I've even bought a few over the last week or so, beyond even minors. So there are some charts that are giving you some nice impulsive standard structures that are still well over support. You could choose those. Stock waves guys are analyzing those. Stay away from the diagonals. They're crap. My opinion. I know other people love them. I love them for reversal signals. I don't love them to trade on the long side. I find them way too variable and way too uncertain to put good money towards, especially as we're approaching the end of a major, what I believe is a major trend. At this time, I can't say there's a lot more that I can glean from the daily. Let's look at the 60-minute. Nope, not that one. 60-minute. I have wanted this to be a bottom of the A wave and then a B wave rally. It's still within the realm of reasonable probability. Problem is, we got that spike up and we didn't continue higher. Normally, when a diagonal completes, you get a strong reversal, but it just continues up much higher quite quickly back to the region from which we broke down. Or I'm sorry, back from the region from which it began. I'm not seeing strong evidence of that. And I think, as Luke puts it, it's kind of on the clock. The MACD is now coming up again to where I would say it would be considered a resistance region for a corrective bounce. I would probably look at that as a region for a corrective bounce. So we're kind of running out of time and room. And in my opinion, the rally thus far is really a three-wave structure. I'm not seeing anything that is super. There's no clear evidence, especially on ES, that this was a five-wave structure. Now, on the micro, yes, A, B, is this a leading diagonal for a C wave? Maybe, but I got to tell you, if we break down below this B wave now, folks, then I have no choice. There's it. I have no choice but to assume we're still trying to complete the A wave. The 6350, 6360 region is our next support that could present a bottom for the A wave. But unless we start seeing some real movement to the upside, I would say at the latest by the end of this week. Unless we start seeing some real movement to the upside, the probabilities start to increase that we are going to test that 6350 region sooner rather than later.